Most people think their money is safe in the bank. But what if I told you that keeping too much cash in your checking or savings account could actually be putting your financial future at risk? Today, we're breaking down the 5 safer assets rich people prefer instead of leaving their money sitting in the bank. And by the end of this video, you'll know exactly why the wealthy treat cash very differently than everyone else. So stay with me, because the average person never gets taught this. The first problem with parking your money in the bank is simple: inflation. Every year, the dollar loses purchasing power, and the interest you earn on your savings is almost always lower than the inflation rate. That means your money is quietly shrinking. And while the average person accepts this, rich people absolutely do not. They move their cash into places where it can grow, appreciate, or at least protect itself. Let's talk about the first asset they use. Asset number one is Treasury bills and bonds. These are backed by the US government and considered one of the safest investments on the planet. Wealthy individuals often store millions of dollars in short-term T-bills instead of bank accounts. Why? Because even a modest yield of 4% or 5% beats the near-zero interest you get from most banks. T-bills are liquid, low risk, and they preserve the value of your money better than a traditional savings account. For rich people, this is the upgraded version of keeping cash on hand. Asset number two is high-quality index funds. While banks let your cash sit and do nothing, index funds let your money ride on the long-term growth of the U.S. economy. Wealthy investors especially love broad market funds like the S&P 500 because they offer diversification, solid historical returns, and simplicity. Instead of letting money decay in a savings account, rich people put excess cash into index funds and let compounding do the heavy lifting. Over decades, this single move creates more wealth than almost anything else. Asset number three is real estate, but not just any real estate. The wealthy target properties that generate income: rental homes, multifamily units, or commercial spaces. These assets not only appreciate in value over time, but also produce monthly cash flow. That's something your bank account never does. The difference is huge. Your bank gives you 0.01% interest, while a rental property can give you 6% to 12% returns every year, plus tax advantages, plus appreciation. It's easy to see why wealthy people funnel so much of their net worth into real property. Asset number four is precious metals, especially gold. Gold has been used as a store of value for thousands of years, and it acts as a hedge against inflation, currency problems, and market instability. Rich people don't typically buy gold to get rich. They buy it to not get poor. It's protection, insurance for wealth. When banks fail, when markets crash, when inflation spikes, gold has historically held strong. It's the asset wealthy families hold quietly in the background, just in case. Asset number five, and this one is becoming more common, is high-yield money market funds. These are different from a normal bank savings account because they're usually offered by investment firms, not banks. Money market funds can pay much higher yields, sometimes several times what a bank pays. For rich people, this is a safe place to store short-term cash while still earning solid returns. It keeps their money liquid, stable, and productive. No wealthy person wants dead money, and money markets prevent that. Now, does that mean you should never keep money in the bank? Not exactly. Everyone needs a basic emergency fund, usually 3 to 6 months of expenses, easily available in a regular savings or checking account. But the key is this: anything above that amount shouldn't just sit there doing nothing. And this is where the rich separate themselves from everyone else. They don't let money get lazy. Every dollar has a job: to grow, to protect, or to produce. The biggest takeaway is that rich people don't rely on just one asset. They diversify across safe, stable, and productive places that protect their purchasing power. Banks are good for transactions, paying bills, or holding emergency cash. But they're not good for long-term wealth preservation. And that's why so many wealthy people use the assets we discussed today. They're not taking wild risks. They're simply putting their money in smarter, safer places that give them better returns than if you've been leaving all your cash in a bank account Now is the perfect time to rethink your strategy. Start by building your emergency fund. Then consider moving extra money into assets that actually work for you. Whether it's T-bills, index funds, real estate, gold, or money market funds. The goal is simple. Protect yourself from inflation and grow your wealth in a stable, predictable way. You don't need millions to start. You just need the mindset that if you found this breakdown helpful and want more videos that simplify money, investing, and financial freedom, make sure you subscribe to the channel and hit the like button. It really supports the content. And comment below which asset you think is the safest for you personally. Thanks for watching, and I'll see you in the next video.